good morning. You're watching the markets on ET Now. I'm Anisha Jain. With me is Nikunj Dalmia. Well, the global picture might be a bit murky this morning with the US indices falling a bit and the fact that the Asian markets have started on the back foot, but it's all about the Indian markets. And the big headline, of course, is that we touched fresh record highs yesterday. 22,200 was scaled very comfortably given the big rally that we saw in HDFC Bank. In fact, that bank alone contributed almost 60 points to the Nifty upside, and there was that clear outperformance that came in from the Bank Nifty yesterday, which had been the key laggard otherwise. Sixth day of gains coming in for the Nifty, but the broader markets underperformed a bit. FIIs, they continue to sell in the Indian markets, 1,300 crore worth of selling, but do remember there were large block deals and large trades that happened, so that data might have all of those adjustments as well. But Nikunj, if you look at the broader market, there is no big thunder there in the market. There still continues to be a bit of a somber note. There's not that big momentum that we usually see with record highs.
6 days on the trot now, you've moved in the right way. So directionally, markets are moving higher. Optically, you're making a new high. But is the underlying current that powerful to excite everyone to say that, okay, this is a very power and a very punchy move? So these are incremental moves. These are not big moves. Typically, when there are incremental moves, what historically has happened is that when there is an incremental move, then more than benchmark indices, the mid and the small cap space or specific themes, they tend to outperform because traders would clearly view the market on the following lines, which is that markets are going higher, but they are not showing any big, they are not giving you a lot of opportunity to trade long. B, there is no clear, large, powerful news push or a well-defined leadership, whether it is banking, IT, or even for that matter, PSU. But because markets are holding on, I guess the general approach would be that you don't want to sell your stocks. You want to buy the stocks which you wanted to buy on a bad day, and there is no way you want to go short or raise cash in this kind of a market. Say, Nishan, this market going short is like a no. But raising cash also and raising cash quite a lot also may not be a great idea, because what will happen is that if incrementally markets are going higher, what will cement as a thought is that this market is not in a hurry to come down. So then why are you in a hurry to lock out or book profit? So that churn will continue. The churn will continue in a lot of stocks. I think that's how I see the magnification, that 80% of the market may do nothing, but 20% of the market, I think, will continue to move higher. And that's what I think we are seeing.
Yeah, no, that's absolutely true. You are seeing that one case every day, which is actually pulling the markets higher. There has been a lot of churn. Of course, autos, pharma, these were the sectors and segments that were doing very well earlier in the week. Now it's shifted to bank. Of course, today is the Bank Nifty weekly options expiry as well. So let's see what kind of moves that we see as far as Bank Nifty is concerned. But over the last 5 days, we have seen that the Nifty has managed to gain almost 1,000 points from 21,200 thereabouts. We're looking at 22,200 right now. So let's see what the way forward is on that one. But just putting the data on the perspective, what Nikunj is saying as well, that probably it's not the best time to raise cash or even shorting the markets. And even right now, if I look at the F&O setup, there is some short covering which has been happening. So people clearly covering their short positions and not looking at being bearish on the markets right now. But the other data point that we want to discuss is, of course, PSUs, because they have seen a very, very strong rally of late. And Nikunj, there was always this debate that, PSUs for the longest time were considered only trader stocks or maybe retail stocks, and institutions didn't used to put a large amount of money to work there because of a lot of overhangs. But clearly the data that we have recently in terms of the January data, what mutual funds have bought and sold as far as PSUs is concerned, is very interesting as well.
See, I think the bias is clearly towards banks, whether it is SBI in the large cap or Bank of India in the mid cap. Interestingly, if you look at the domestic folks, and I continue to maintain that I don't think FIs are buying PSUs, but if PSUs are in leadership position, then that's a function of HNI, retail and mutual funds. What are mutual funds doing? It's an important data, so I'll urge our viewers to stay with us because mutual funds in a sense are getting flows, but they're actually selling more PSUs and buying less of PSUs. And whatever they're buying in the PSU space, it's actually SBI, Bank of Baroda, and to some large extent Coal India. But they're going easy on defense names. They're going easy on some of the smaller power names. They're going easy on railway names. And you can establish that by looking at the pure data for the month of Jan. Now, we're talking about Feb here, but this is the last disclosed data. We're discussing it because the data now, all mutual funds have compiled their fact sheets. So on the sell side, you've got names like BPCL which are coming up, BL which are coming up, NHPC which are coming up. Similarly, on the small cap space, what is coming up? You've got NMDC, SJVN, IRFC. So mutual funds are, in a sense, looks like the data is indicating that the incremental buying in PSUs by mutual funds seems to be coming to an end. B, if at all, they are focusing more towards banks and less towards other PSUs. And data is indicating that stocks like BEL or defense names or some of the railway names now actually are on the sell side, where they're looking at reducing exposure or have already reduced exposure. Now, what is the reference and relevance of this data? Look, PSU stocks are in a bull run. Everybody thinks that they are like the leadership space, which they might be. But within that, I guess the rising tide phenomenon, which was there, that I think last year, not 80%, but I think 99% PSU stocks have gone higher.
Absolutely.
Right? I think what you may actually see going forward in this year is that only 20% PSU stocks will go higher. 20%, 25% will correct and 30-40% may not go higher. I think railways will correct. Defense is becoming expensive. But banks are cheap. Energy names, especially the big power names, they're still very cheap because the cycle is strong. And I think the smaller PSUs, which in a sense are going higher largely because of a cyclical upturn or re-rating of P multiples or a rising tide phenomenon, you got to be just a bit careful there. Look, PSU is a great space to be in, but at these levels, it will not hurt you if you just take some chips off the table, at least in mid-tier PSUs.
Yeah, and you've made great amount of money if you have invested in those PSUs. So why not book some of those profits? But yes, that's the big verdict coming in on PSUs, that you have to be careful. It's no longer that rising tide phenomenon, and the easy money that we call it is off the table. And even mutual funds have been booking profits or taking some chips off the table when it comes to the PSU space. So that's a very interesting data point that we'll keep chatting about and bring you more perspective on as well. But time now to get more perspective on the global data points as to what the commentary is like on the macro data points that we have seen, plus Nvidia, because that's the big earnings which is lined up. We already saw mixed kind of cues coming in from Home Depot as well as Walmart in terms of their earnings. Let's see what Nvidia reports. But for other global commentary, let's go across to Vinny.
So absolutely, in terms of important commentaries that we've seen coming in overnight, the first one is coming in from Peter Schiff in a tweet that he's highlighting that yes, there's a 100% chance he believes that the Fed is actually going to make another policy mistake, and it's not going to be a policy mistake that everyone's expecting in terms of the mistake of staying too tight. The mistake that Fed normally makes, he's highlighting, is that they are always loose in terms of the policy, and that is a mistake he believes that the Fed will actually repeat again as well. Moving on to the next commentary that we have, this one is from Bank of England's Governor Andrew Bailey, who's saying that inflation does not need to fall to its 2% target before the policymakers back an interest rate cut. He's further told in the Parliament yesterday, in commentaries coming in from him, that the market bets on a rate reduction this year, and that is not unreasonable in terms of an expectation that the market has. He's played down the significance in terms of the UK entering the recession as well. But yes, that's the word coming in from him. It's not an unreasonable expectation that one could expect a reduction in terms of rate cuts coming in from BOE. Lastly, we have commentary that is actually coming from Citigroup, and this is a very interesting commentary given that they're highlighting that there is more added interest that has actually come in terms of India. That's the word that he's getting from US-based investors as well. The Citigroup actually highlighted that they've seen increased interest among global ex-US funds as a weightage of India in terms of the portfolio that they're looking at, in terms of how much interest they're showing for Indian companies in terms of investments as well. So that's surely an interesting commentary that we have that is coming from the Citigroup.
Okay, so those are the latest commentary coming in. Thanks, Vinny, for putting that on board as well. But let's get to our technical experts and make sense of what happened yesterday and what the levels that we should be watching out for. Naresh as well as Kunal is always with us on the show. Kunal, hi, good morning. Let me start by asking you, good amount of rally yesterday on the banking index led by HDFC Bank. What's the credence and sustainability of this rally?
Good morning. So there's a lot of credence and sustainability factor for this rally for the Bank Nifty, because it's For the first time, I think led by a lot of large cap private sector banking names, whether it's resurgence of HDFC Bank rallying by I think around 75, 80, 85 to 90 odd points, ICICI Bank recovering from sub 1000 levels to now on the verge of breaking 1050 mark, Axis Bank also getting into a recovery phase, as well as along with this the PSU banking stocks, the larger cap names, SBI etc. are looking very strong and charged up. So I think that's a very important phase of the internal setup within the Bank Nifty. On the banking index, what we've done over the last 1 month, particularly from mid of January somewhere, is we've managed to retest the 200-day moving average twice. We did not break below those averages in terms of closing basis, and we've managed to bounce off from those levels. Now, in that process, it's also completed, the Bank Nifty has completed a classic double bottom pattern, and it's almost like a 1500 to 1700 point double bottom formation for Bank Nifty. That takes the targets on the upside to closer to 47,500, 48,000 mark, which means on yesterday's closing, I would expect at least another 500 to 700 points rally for the Bank Nifty over the next maybe couple of days.
Okay, so more legs to that Bank Nifty rally. Of course, that was one index which hasn't hit those record high levels yet. The mid cap and small caps were scaling fresh highs. Nifty, of course, had scaled fresh high yesterday itself, but Bank Nifty was still 1,000 point away. And hopefully, if things go by what Kunal is saying, we are likely to see that soon. But Naresh, what's your sense on the market setup right now?
So the sense is very clear. When we look at the markets, what was missing was heavyweights participating in the rally. Now we have HDFC Bank, which has bounced back from the 1350, 1400 levels. You have ICICI Bank hitting closer to all-time highs. You have SBI, which has taken lead. Reliance was already taking lead. So the whole basket of top 5 names, you have 3, 4 names taking leadership. So that creates a stronger trend on the upside and a steady one. So out here now you shift the base. Earlier the base was 21,400 to 600. Now that base could shift to 21,800 to 900 and open up upsides to 22,500 on the Nifty. Similarly, on the Bank Nifty, crossing 47,000 opens up a move towards 48,000, and the base now shifts to 46,400. So overall, it becomes a buy on dips going forward with the base as a stop loss.
Buy on dips, that's the texture of the market right now. But let's get stock specific and get those ideas. Kunal?
I'll go with 2 large cap names. First one is the one HDFC Bank, something which we discussed last week when we preempted the bottom formation for the stock. So maintain the targets on the upside, 1500 for HDFC Bank. Stop loss could now be trailed higher to 1425. Nestle is the other stock which is also showing signs of a probable bottom formation for itself. So the stock has gone through a very sharp correction, more than a 20% odd correction in the last 2 to 3 months of the price trends for itself. The indicators have started to get into a rally or a breakout mode. The prices have still lagged behind, but I believe with this momentum, indicators first rallying up higher, this could probably be an indication that Nestle as well as many of the other FMCG names which are forming similar patterns, they could get into a breakout mode. So would suggest a buy with a target of 2,600 and stop loss at 2,500.
Okay, so that's the latest in terms of the stock picks, 2 large caps. Naresh, are you sticking to the large caps as well?
Yeah, sticking to the large caps. Similarly, the first one is a bank, but it is ICICI Bank. We've seen that initial bounce play out on HDFC Bank, and this could continue. But ICICI Bank is a fresh breakout on cards. Spent a lot of time testing that 1050 mark. Breaking that opens up a new 52-week high, a new all-time high, and a range breakout, and the continuation of leadership. So if that happens, it opens up much bigger targets also going forward. As of now, starting with a target price of 1150, stop loss at 1020. Second is a buy on SBI Life. Now, if you look at SBI Life, it has been a relative outperformer in the whole insurance basket. The stock again made a new 52-week high on an all-time high above 1500. So a classical trend out here, makes a breakout move, consolidates, and again it makes a breakout move. So looks like a fresh breakout move in the making. Target expectation will be 1650, a stop loss at 1480.
Okay, SBI Life and ICICI Bank on Naresh's list of buying recommendations. But shifting focus to the stocks which will be in focus today on account of news flow. Winnie is joining us in the studio for that. Winnie, interesting and surprising move coming in from Novelis last evening. I don't think anybody on the street was expecting that draft IPO papers that they filed with SEC now.
Absolutely, it is not something they were expecting, but when you see it and what brokerages are also highlighting, first let's highlight what has actually come in terms of news flows. Now, Novelis has actually filed an IPO paper with the SEC. The shares are expected to be offered by Novelis' sole shareholder, that's AB Minerals, and that's a wholly owned subsidiary actually of Hindalco Industries. So that is indirectly Hindalco is diluting stake in the company. Now, obviously, the proceeds of this, Novelis is not going to be receiving any of the proceeds from the sale of the shares as well. And what is going to be happening, that this is implying that the money will actually be repatriated to India and either maybe used for growth of capex or deleveraging is something that analysts are highlighting as well. Now, furthermore, Nuvama is saying that currently the derived market cap, what they derived in terms of Novelis, was around $9.6 billion is what they have derived in terms of a market cap. And what they are saying is that the listing of the shares may actually attract a bit of a holdco discounting too in the future that they're keeping an eye out on. Investec, on the other hand, is highlighting that maybe they see limited scope in terms of an unlocking of valuations in terms of what they see coming in, given that the peer group valuations, how they are paired right now, as well as given that there is holding co discount that will be there and potential tax outflows as well. So what Investec is saying, they do not expect much of a cheer coming in on this part as well, but surely not that Street was actually expecting this. So that's going to be one to watch out for.
I don't know why are they doing this. The money goes into Hindalco. There's a holding company discount which Hindalco will always attract. Then there's a 20% tax which you'll have to pay. So ultimately, minus that tax, whatever money comes into Hindalco, what would be the incremental benefit of this? So I think, from my standpoint, I look at it this way, that if the cycle in the metal space turns, then suddenly on sum of part, when you look at Hindalco and when you look at Novelis, it could really look very, very differently. Historically, what we've seen is that every time when big companies, they tend to split the businesses, list different business separately, it tend to list very differently. The cash usage in this case, at least we are not aware as to what the final purpose of the cash usage is, because Hindalco is a pedigree company, they really don't have a debt problem. And the cycle in the last couple of years has been strong, but is it the capex requirement which they want to fund via the equity route? For Novelis per se, are they looking at unlocking the value of Novelis because it's a metal company, and when the cycle turns on the sum of part, which was always embedded in, now the real price discovery would happen? That I think could really be the option here. I think what they're trying to do, see from a group standpoint, they're trying to revalue Novelis rather than Hindalco divesting 25% stake in Novelis. I think that is the spirit here. So for Hindalco shareholders, it's not exciting. But for Novelis now, it really becomes part of an Indian company which is going global, and it is in the metal space, and then it's the first stop. So I think that is the spirit where ultimately the value of Novelis could be unlocked, because remember, Novelis is in US. US manufacturing is picking up. Given that now US election is around the corner, anything which has got to do with local US manufacturing, I think would really be the theme. And in that, I think Novelis is really going to score a lot. I think I look at it this way.
Yeah, maybe that's the case, because other than that, there is no reason for that fund to kind of come to Hindalco. Novelis, of course, is clearly getting nothing out of it in terms of the money and the proceeds. So probably price discovery is the real reason here. But the price discovery is also going to happen in the paint sector, and that will be because the competition will get very, very real. Grasim, that was the latest entrant that we were waiting for the last couple of years. We had heard about those big capex announcements, but it's finally going to happen this week. What would be the implication on the paint sector, and what is the brokerage channel check suggesting, Vinny, on that?
Absolutely, this is an exciting one because everyone was, talking about this. There's so much talk about Grasim as well. Paints, they have the money and the capex to put in, which they've already announced. So that is the factor that is playing in. Now, obviously, this is going to be the set to launch their paint product and inaugurate. It's a highly anticipated that first plant that they were watching, and this is in Panipat. That is going to be this month itself, just in the next few weeks. As well as, the company is going to be commissioning 2 other plants that they've announced as well, and that's also going to be in the next couple of quarters itself. One is maybe going to be in Q4 itself, and the other one, the third plant, will be in the next 12 to 15 months as well. So they're coming in the paint segment with a bang. They are, the announcements they've made in terms of capex is that 60% of the planned capex is around 10,000 crores is for the paint business itself. So there is going to be a lot of increase in terms of competition that they have as well. And they want to operate in Panipat, Ludhiana, Chayar plants is what they are looking, and this commencements are going to be happening by the end of FY24 financial year when you look at it as well. So that's going to be very, very interesting to watch out for. They're focusing a lot, and they've already focused in the last couple of months in terms of the R&D that they have, and pilot plants have already started making those paints. Pilot segments have already been started going on as well, offering a large range in terms of the product wise that they've been focusing on as well. And that's what Jefferies is also highlighting in terms of how they are actually going to be focusing on the paint segment, and that's why Grasim is one of the picks that they've highlighted, and today they're talking about Grasim Industries.
Yeah, but Nikunj, do you think really there is going to be this fresh scare in the paint stocks because of this? Because it's a largely known news.
See, it's not easy to create a franchise value what Asian Paints and a Berger has created. It's not that this is the first large corporate attempt. Previously, corporates have also attempted to be in this paint segment. So it's not very easy. Why? Because you got relationship with the distributors, you got relationships with the entire so-called builder fraternity. There is a brand and there is a recall. To think about it, look at JSW Group. They have tried to move into paint. They have great relationship with builders because they are also in the steel space, but it's not that they've really managed to incrementally have an impact per se. The paint industry is dominated by 3 or 4 large players in India, is because there is a reason why that distribution and that entire relationship that really matters. I mean, Asian Paints uses phenomenal amount of brand advantage and leverage what they have in terms of the supply chain what they have. So it's not going to be easy. But what may happen is that while if you're an investor, you would say, look, I know that there would be an impact, which means that Grasim will always ensure that there is no large price hike. Grasim will always ensure that if paint companies are making extraordinary margins, they will come like a challenger there. So the great times where paint industries were enjoying high margins, I think that goes. I think they will have to spend more in advertising for sure, competition. So I think it is the scenario, what it looks like right now versus what may it look 3 years from now may be different, but looking at the history of how the paint sector has moved, I don't see that in the near term we should be really worried.
Okay, don't be too worried if you're holding some of those paint stocks, because this threat has been there and it's not an easy business to break into, especially with the market share that the incumbents have. Thank you, Winnie, for joining us and talking to us about those stocks and news. But let's talk about this big one, and we told you first and now it is confirmed. That's about the QIP at Swan Energy. Yesterday, remember, we told you that there is a QIP which is likely to happen. It's finally been announced. 3,000 crore is the base size with a green shoe option of 1,000 crore rupees. My colleague Cheryl, who broke this story first, is joining us with the latest. Hi Cheryl, congratulations on getting this one right.
Thank you so much for that, Anisha. Good morning to you. If you look at it, yes, it's an 18-hour news break confirmed. We informed our viewers on February 20th that Swan Energy was in talks with participants in order to raise funds via QIP. The size was about 4,000 crore rupees. In the evening, Swan Energy informed the exchanges that the QIP they have gone ahead and launched the QIP, and the SEBI floor price for that QIP is set at around 703.29 rupees per share. As per the terms of the QIP, the base deal size about 3,000 crore rupees with an upsize option of up to 1,000 crore rupees. So in total, it would be around 4,000 crore rupees. Remember that the company is going to use this particular funds or the proceeds that they will be raising in order to repay some of their debt as well as modernize their facilities. Apart from that, sources have told ET now that this particular QIP has seen very strong interest, and the issue has already been oversubscribed is what the sources have informed us. Apart from that, what sources have informed us is the fact the names of the interested party in the Swan Energy QIP. So some of them are SBI Mutual Fund, HDFC Mutual Fund. You also have Quant Mutual Fund that's shown strong interest for the QIP, Union AMC, Tata AMC. Apart from that, you have Bandhan, Samco, Birla Life, Morgan Stanley, BNP Paribas, and Hong Kong-based Infini family office, I beg your pardon. They have actually shown strong interest for this Swan Energy QIP issue. And like I mentioned, strong interest coming in from domestic mutual funds as well as select FIIs. And the issue for now, what the sources are saying, is already oversubscribed.
Oh, so the issue is already oversubscribed, and it's a large-sized issue. It's not a very small amount, 4,000 crores, but clearly a lot of interest coming in from the DIIs as well as select FIIs. Thanks, Cheryl, for joining us with all of that. Let's do one thing. Let's take a short breather on the show. We'll come back and discuss more stocks which will be in focus today. Welcome back. Well, Mr. Sanjeev Bhasin is also joining us to talk to us about his stock ideas, because that's something that has always been making you good money. Mr. Bhasin, I'll come to those stock ideas, but before that, I wanted to begin by discussing what's happening at Hindalco Novelis. What's your take on the recent news flow about Novelis looking at perhaps an IPO in the US?
Yeah, good morning. Anisha, I think it will be the first from the AV group. And if I recall, Novelis was a prime buy in the late 2000s when, Tata's acquired Chorus and there was a big write down. Hindalco was available at 45 rupees after that recent acquisition because of the debt and the overhang. Novelis is a very clean and a very, very prime asset. The aluminium it makes and the type of market it has, I think it should be a very, very big positive for the company. Now, they've also indicated that there will be some more capex which they will be involving. That is why the stock has come lower. But I think it's a good opportunity to buy. Once we know more details on the pricing and the amount, I think there is close to $1 billion which will be raised by the AB group. It could be a long-term positive. And I think I'm extremely positive on commodities as a whole and metals particularly. So we think that this could be a positive news for Hindalco.
Positive news for Hindalco, that's the word coming in from Mr. Bhasin. Surely a one to watch out for there. But what more we are watching out for is the consensus on the trade time extension still eludes. Now, ET now has learned from sources that BSE Brokers Forum has yet not agreed on the proposal for extending market trading hours. Ankur is joining in with us to give us more details on that. Ankur, what's happening on the time extension of trade hours over there?
Yes, unlike what wide anticipation was there, that there is a consensus among brokers for extending the trading hours, what we have learned is that BSE Brokers Forum has yet not given approval for extending the trade time. While on the other hand, you remember that NME had approved the idea of extension of market trading hours, and similarly, another body, CPAI, had given approval. However, we learned that BSE Brokers Forum is yet to discuss the matter in the meeting, and we learned that some of the small brokers are opposing the idea of extension of trading hours. Now, this whole issue is important because Industry Standards Forum, which comprises of BBF, that is BSE Brokers Forum, NME, NSE's Brokers Forum and CPAI, all these together have to submit the views to the market regulator SEBI by month end, and if it is not approved by BSE Brokers Forum yet, it does not look from outside that all the brokers are in favor of extending the trade time hours. Remember, NSE had proposed the idea of extended trading hours in the evening, and that too in FNO segment. However, it has to be approved by the market regulator, although market regulator has already given a blanket approval for extension of trading hours till 11:30 p.m. However, whenever this is supposed to be implemented, regulator will see how brokers are going to adjust to it, how other market participants are going to adjust to it. So all in all, BSE Brokers Forum has yet not approved the idea yet, and we need to wait and see if at all finally there is a consensus before the views are supposed to be submitted to the market regulator.
Okay, let's wait for that consensus. Widely anticipated this one as well. Which side will it swing? Will we get those extended trading hours or not? Ankur will surely be on top of story and tell you all of that. But Mr. Bhasin, coming back to our conversation about stocks, Devyani International is going to be in focus on account of that 4.5% stake that Yum Brands might offload today. What would be your recommendation in the QSR space?
Yeah, so first, Anisha, a word on the extension of trading hours. Many years back, I used to trade in Hong Kong. Of course, I was trading the South Korean and the Indian market as a from participatory notes for Deutsche Bank, and the Hong Kong market used to close twice for lunch break and one for a general. Even today, the Nikkei closes once. We have apathy. We don't even break for 5 minutes for a lunch break, and we want to keep extension going on for eternity just because the US markets are open. Can you change the geographic factors that the US is 11.5 hours ahead of us? I think ridiculous. If you don't keep work-life balance, then you will actually lose it. In the end, the volume will be the same and all you'll do is increase volatility and increase, the pressure on outsiders who will become into this habit of trading in the evening and so on. So I think from my side, it's a big no. Coming on Devyani, that is one of our top picks. You cannot have such a big brand trade at this valuation. It is a very good long-term pick. Yes, this overhang of Yum may be one of the opportunities to buy. So I think at 150, it's a clear go ahead and put your money where your mouth is on Devyani. In the end, other FMCG space, we picked up two stocks, and we think these are very, very attractive as the price performance. One is Bata, and the other is Patanjali. The way rural incomes have moved, and particularly in the two-wheeler sector, I think staples are going to do extremely well. Bata as a brand is now arguably the best in the country, and so is Patanjali gaining more and more market space from the likes of Lever. As a disclosure, both these stocks are in our portfolio. We have added it, and Devyani can make a perfect combination for QSR and FMCG, all three put together.
Right, Mr. Bhasin. There's something interesting that has come in is also that we know for a long time that Grasim Industries has spoken about the paint segment, the capex that they're making on that front as well. So overall in the paint industry, how do you see that moving? Obviously, when you look at Asian Paints, Berger Paints, not much has happened in terms of a stock move for them so far. But now also competition coming in, there's increased competition already there. What's your view on the paint sector and what is it that you like here?
Yeah, right, Vinny. So, Grasim, JSW, they have both ventured into this and they have synergies in the shape of their businesses being in the same model. It has been a very big positive for Grasim, actually, which has outperformed. But I still think Asian Paints with 53% market share in decorative is an expensive stock and will remain. There is going to be a shift of some portfolios where people will, long-term investors may opt to book and get out. But I still think HDFC Bank, Asian Paints are two stocks which, if you are looking for consolidation, which have not done much in the last 2 years, could be the ones which you must own. You cannot have a bit. Asian Paint and MRF are two stocks which have never diluted equity. And I think that if MRF is 1.5 lakh, Asian Paint is also set to go higher as earnings catch up. Now, in the short run, you're right, the competition is there. But these paints are like brands like Muthoot. HDFC Bank will not get the gold loan share as much as Muthoot gets. Same is the case with Asian Paints. Trust, brand and past performance make it a must-have. And that is what stands out for Asian Paints. So we are bullish rather on Asian Paints. We have both Asian Paint and Grasim in our portfolio.
Bullish on Asian Paints like Grasim too, and HDFC Bank too is one of those blue chips which is coming back on the radar. But I want Naresh's view on the two-wheeler stock. But just to set the context, let's go across to Shrishti and see why we are talking about a potential slowdown as far as two-wheelers is concerned. Shrishti, hi, morning.
Hi, very good morning. First of all, CLSA has come out with a note on the two-wheeler counters where they are highlighting the Vahan data in the month of February, where they are saying that in the first 19 days of the month of February, they are witnessing a slower growth in the two-wheeler segment. They're also anticipating that the two-wheeler retail volume is likely to grow at the mid-single digit in a YOY basis in the month of February 2024, and the electric two-wheeler volumes would likely to remain flat on a yearly basis. The competition is likely to escalate in the two-wheeler segment, and they have also highlighted some of the players in the segment wherein they believe that Hero as well as Royal Enfield volumes are likely to decline in this particular month, while for TVS and Honda they should witness double-digit growth. And even Bajaj, on the positive front, the commentary is coming that they are saying that Bajaj is gaining the market share in the 125cc motorcycle segment. So here in the pressure points in terms of the players, Hero MotoCorp as well as Royal Enfield are some companies which are expected to witness the retail volumes decline in this particular month. While for Hero MotoCorp especially, Morgan Stanley has also come out with a note where they believe that the share price is expected to fall relative to the country index over the next 30 days, as well as they anticipate a probability of 70 to 80% for this scenario happening. They also say that the retail market share for this company has come off from 32% in December 2023 on a calendar year basis for 2024, that this number now stands at 28%. And for Hero MotoCorp, they have set an underweight rating with a target price of almost 1,000 rupees lower from last day's closing at 3,638 rupees. So not a good note coming in on Hero MotoCorp, where Morgan Stanley believes that there could be a likely pressure in the next 30 days on this particular counter. While on the two-wheeler segment, CLSA does believe that there is a slowness, or the two-wheelers are expected to be in the slow lane for the month of February.
Okay, Naresh, and let's get in your views on the two-wheeler space as well as the auto sector as a whole. Anything specific that is looking exciting? Shrishti did talk to us about the whole auto industry, but anything specific that you are liking in the two-wheeler space as well as the four-wheelers?
So if you look at the two-wheeler space, it started off with TVS Motors being an outperformer, and it's done superbly well. Then we had Bajaj Auto break out above 4,000, 4,400. Now the stock is at 8,000 plus. So it's been a 100% move from those levels. You have Hero MotoCorp breaking out about 3,000, 3,300, has gone up to 5,000. So the outperformance has been huge, and a pause is very logical, and say whether the pause becomes a correction is a tough call to take as of now, because we are still trending up for the names. So as of now, auto at current levels, the risk reward is not great. One can be looking to book partial profits or keep a say a view on the way down to get a little more exits. But at current levels, they're not a buy. But in the auto pack, we have seen Tata Motors first breakout, and now Maruti is the breakout, which has been clear. So Maruti for 5 years, 6 years did nothing from 2018, where it was 10,000. It was at 10,000 in 2024 as well. It's broken out about 11,000. And going forward on dips, Maruti seems to be the best bet in terms of risk reward. And then maybe some months down the line, even Eicher Motors could be coming in that case. As of now, it's a consolidation.
Okay, a bit of a consolidation on two-wheeler space, not looking to quickly get into that trade. But just remember, Hero MotoCorp, that Morgan Stanley note actually came yesterday, and we saw that the stock took a knock of around 4% yesterday itself. So just keep that on the radar as well. But coming back to your conversation, Mr. Bhasin, I wanted your take about Z as well. Yesterday, that stock was in the upper circuit, that entire news break of perhaps a deal coming back to the table, but now the company has denied it. This morning, there are fresh reports of some $200 million accounting issues that SEBI is investigating. It's becoming a complete roller coaster ride, to say the least.
Yes, like you said, it's a Saas Bahu episode, and you don't know which side of the day or the bed they open up. And rumors all about. I still continue to think once this murkiness is over, if Sony does acquire it, it will be a huge win-win for shareholders, for banks, lending institutions, and for Sony. Now, what comes out of it? These, like you said, every day there is rumor talk of the stock, and the stock is in ban period, and you see extreme moves. I still think the value of the asset at 13,000-14,000 is an extremely attractive business to be in India. But like I said, we will wait for more of this, color on the clarity which has to emerge. Yesterday's paper said that within 48 hours you could hear of a deal. Now, we will wait. We are an investor there, and we will wait. Anisha, on your other point on the brokerage house of downgrade of two-wheelers, one of the ones which you mentioned, he had come down with a downgrade at 3,200 on Hero Moto, and for a target of 23, it went to 5,000. At 5,000 again, you're coming out with a, so you missed the real 30%, and now again you come with a downgrade. Somewhere down the line, the stock will correct. Bajaj Auto from 9,000 can come to 8,000, but you missed the woods for the trees. You had no idea what two-wheelers and the comeback was. So always remember, big names are there, but 99% of the time they are mostly wrong. So when they come out with buys and sells, you have to be a little bit contrarian, as was the FI view in November, where 18% long was there. They were 18% long, 88% short, or 82%. And you've seen where the market has gone. So this market is a retail-driven market, which is maybe overpriced to an extent, but we should focus more on retail rather than some of the big names which have 99% been proven wrong.
Okay, Mr. Bhasin, thank you so much for joining Unitas, giving us your views on Z as well as the auto pack as well. That's one to watch out for. But, let's talk about Z a bit more. Now, Z, yesterday, like Anisha was mentioning, surged in trade as well. Reports suggested that it was reviving those merger talks with Sony. Moreover, it is under the scanner for accounting irregularities. Now, Ankur is joining in with us to give us this latest updates, what's actually happening on this front. Ankur, what is this latest update? Because yesterday, on the back of reports, we solely saw Z run up. But what is the actual data points that are coming in?
Yes, Z Entertainment has categorically denied that any management meeting would have happened for revival of the merger, which was scrapped because Sony sent a termination notice. Now, as far as the details is concerned, what sources have informed us, yes, there is a meeting which has happened, but the meeting has happened between the lawyers as per sources, and neither any of the board of directors had held meeting between either from Z or Sony. Now, remember that there is a separate case which is going on in NCLT, whereby Z Entertainment has said that NCLT should direct both the parties for implementation of the merger because it was approved by the insolvency court earlier. Separately, SIAC is also hearing Sony's plea on arbitration proceedings. All in all, it will all depends on the outcome of these court proceedings, what is the benefit or on which side actually the penalty goes, because Sony has also claimed $90 million from Z Entertainment because the merger is terminated. So it is all going to boil down to court's outcome, what happens between Z and Sony.
That's the latest, but that's a developing story as always. We'll keep tracking what's happening there. But let's go across and welcome on board Mr. Dipan Mehta. He's joining us to talk to us about specific stocks. And I wanted to begin by asking you, Dipan, about the PSU stocks and the banking names in the PSU vertical. Of course, Union Bank is going to be in focus on account of that 3,000 crore QIP that they have announced. Okay, I think we'll just try and reconnect that line with Dipan, but let me take that question across to Kunal as well. Kunal, from the entire PSU banking space, which is that stock that you would still recommend a buy on despite the massive run-ups that we have seen?
It'll still be SBI. I think even after this 150-point rally from 600 to 750, 760, where the stock is trading, I think it still looks very attractive. The stock has trended up quite well. Lack of correction for SBI, and I think that's the hallmark feature for the stock price, because you've seen PSU banking stocks in the tier 2 names, the mid caps or the smaller cap high beta stocks. They have a very strong tendency of going into rallies of 30-40% in a short span of time. But then the correction which happens into these stocks is also not shallow. The correction also seems to be intense for these names. For SBI, it's a different case altogether. The stock takes a lot of time to get into a breakout, but once the breakout sustains, the stock gets into a very strong uptrending mode and lack of correction or a very shallow phase of correction. That's the hallmark for SBI in terms of the price trends. I would still believe that at 750 plus mark for SBI, it looks attractive. From the other names, Bank of Baroda is also the other stock which I think is now trading closer to 270 mark. It's been trading around this level for the last 4 or 5 trading sessions. But again, strong trends for Bank of Baroda as well.
Okay, strong trends for Bank of Baroda, but SBI remains the top bet. Dipan, will you concur with the view? And I specifically wanted to talk to you about Union Bank, if you track that one, because I think it's the second QIP that bank is doing within a matter of 8 to 10 months.
Good morning and thank you for having me on your show. I think Union Bank is following a very sensible strategy, and while the going is good and there's so much of interest in banking stocks and the performance also has improved, so they are using this market opportunity to shore up their capital, and eventually that will translate into higher growth rate because higher capital adequacy will enable them to drive their credit book as well, and they'll be able to utilize the entire brand and the distribution network to perhaps lend more. So from that point of view, it's positive. And of course, I think valuation-wise also there's a lot of comfort when it comes to most of the PSU banks. On the whole, I think we are seeing better sentiment for the banks. But then when you look at the numbers which came through for the December quarter, there is a slight bit of caution and disappointment. By and large, most of the banks declared pre-provisioning profits, which were more or less flat or maybe mid to high, slightly high single-digit growth. And earlier quarters, it was typically in the mid-teens. So we are certainly seeing a slowdown in the pre-provisioning profits, and net profit increases have come more through lower provision costs, which cannot be sustained. End of the day, the base effect will catch up over there. So I would say that one should be very selective when it comes to banks. And of course, there's a bit of valuation comfort, but then growth rates also are slowing down.
Dipan, markets at an all-time high, but the thunder, I guess, is missing. Will it be a fair statement?
No, but good. No. Nikunj, it is fantastic that the thunder is missing because if the market goes up quietly, then you can certainly say that the froth is not there and the risks are lower from that point of view. But I think we are seeing a lot of power of liquidity coming in. You may think the thunder is missing because a lot of money is coming through institutional managers, especially mutual funds. And although we have a lot of retail investors coming into the market, but the money is coming through mutual funds or through portfolio managers. So we are seeing that the percentage of professionals managing the money compared to just raw retail coming to the market is significantly higher at this time around in this bull market than ever before. So that may explain that part of the thunder is missing, but I'm perfectly fine with this kind of a scenario.
So Dipan, now the question is, what's next? Will it be earnings season? Will it be the good old retail and MF activity, or will it be the volatility in and around election results? What's next for next 3 months?
Well, that's a difficult one to answer, Nikunj, because you're right. There are hardly any triggers for the markets to move up or down from that point of view. All the risk factors which have been plaguing the market, 2-3 years ago or so, that being rising inflation rates, to an extent geopolitical events, spike in commodity prices, Chinese economy. I think all of these more or less have been discounted, and as such on the horizon, one can't really figure out any new particular trigger which can take the market lower. At the same time, I think all the positives also have got priced in. I mean, I know a lot of investors are saying that in the elections, the BJP government will come in even stronger, and they have this thing that they want to get 400 seats in the NDA. But my response to that is that what can this government not do with the present number of seats which they have, which they will be able to do if they have 400 seats. So from my point of view, any increase in the BJP NDA numbers in the Lok Sabha is not going to materially change the way the economic policies are being followed, or for that matter, the kind of people who are managing the economy at the cabinet level, the finance minister and all the other key ministries, I think will remain particularly the same. So we'll have more of the same government policy. So where is the trigger over there is my question. And that's the reason I feel that one needs to be a bit cautious. You can expect more of the sideways movement. At the same time, we are seeing mild disappointments coming through in a lot of earnings this time around. It may continue to the March quarter as well. When you look at the growth rates and you look at the valuations at this point of time, we just don't have the margin of safety.
I'm just honestly scanning through stocks here. Dipan Mehta, first half of last week, Paytm only went one way, down, 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 down. Now Paytm is only going one way, up, up, up and up. If somebody wants to know that, is this a good time to buy into this fire sale in the Paytm stock, how would you advise it? Because if you get it right, then this could be a doubler in next 2-3 years. If you get it wrong, it could be down by 30% from here.
I think that's a fair risk return profile. I think that you're taking a 30% knock for doubling. But if Paytm was solidly profit making and its business model was understood better, as also the fact that even prior to this, there were certain challenges. The main driver for Paytm's earnings was their loan syndication business, and over there also there were certain changes in regulation which prevented them from raising loans, especially unsecured loans. And we are seeing this entire move of the RBI to try and curb unsecured loans to retail, these loan syndication. They want to regulate it better. To an extent, Bajaj Finance also got impacted by those RBI regulations. So I'd be a bit cautious in Paytm, and considering that our view on the markets is negative to slightly cautious, I would just avoid companies where there's so much of uncertainty and keep the powder dry to buy great quality businesses which may be available should there be a correction.
As take coming in on Paytm. Yes, it's been a roller coaster ride. Let's see which end it really goes to, 30% lower or a multi-bagger. But we have been highlighting the PSU stocks because that's where we have seen big momentum in the month of January and February so far. But what's been the action from institutional investors and what have the mutual funds been adding and reducing positions in? As far as the PSU universe is concerned, let's go across to Snehi to give us that information. Hi Snehi, morning.
Hi, well, yes. So let's take a look at what the mutual funds have bought and sold when it comes to the PSU space for the month of January. Among the large cap names, you have the likes of SBI, Bank of Baroda, as well as Coal India that are on the buy list. So mutual funds have bought all of these stocks in the month of Jan. Surprisingly, on the sell list, you have a lot more stocks than the ones on the buy list, the likes of NTPC, ONGC, BEL, PNB, as well as BPCL. So all of these stocks have been sold by mutual funds on a consensus basis for the month of January. Moving on, let's talk about the stocks from the mid-cap space then. And they've only bought one stock on a consensus basis, and that is Bank of India. On the other hand, they've gone ahead and sold three stocks, the likes of NHPC, IRFC, as well as NMDC. Lastly, let's also talk about their performance when it comes to the small cap space. What's interesting to know is that mutual funds, even on a consensus basis, have not bought any major small cap stock when it comes to the month of January. On the other side, they have sold two small cap stocks, the likes of SJVN as well as NMDC Steel. So yes, this is largely the snapshot of all the mutual fund activity that we saw in the PSU space for the month of January.
Thanks, Nehi, for that. So that's about the PSU vertical. But Dipan, I also wanted your take regarding QSR and this packaged food space. There are a few IPOs which are in the pipeline. That's got the street excited. Devyani, of course, that big block deal happened this morning wherein Yum Brands has offloaded the stake. And then there is a news flow on Varun Beverages that they're looking at doing. We had heard the news about South Africa, etc. already. Within QSR and packaged foods, what are your top recommendations?
None at all, I think.
Because of the valuations or
yes,
what's the
absolutely.
reason?
Healthy habits. I don't promote junk food. I don't eat things which in a sense, he's a marathon runner. You have to realize that. How will you promote such companies? Am I right?
No.
ऐसा कुछ नहीं है.
I'm a marathon runner, but certainly, we have investments in QSR, have investments in Devyani, which has not done well for us. In the past, I have owned Jubilant Foodworks also, and of course, I think Varun Beverages worked out really well for us. But it boils down to valuations, and these companies, they've disappointed two straight quarters in a row. All of these QSR companies, it's not that their stock prices corrected significantly to account for those earnings disappointments. And when you look at a trailing 12-month basis, these are like what, 80 times, 90 times, 130 times trailing 12-month. So, you can't make money when you're buying a stock at 80, 90 times trailing 12-month, however good the prospects are. And that's the reason why we want to be a bit cautious on the entire QSR space. And when there is some sort of alignment as to what their profitability is and what the valuations are, then these companies are interesting. See, typically these QSR companies tend to capture the imagination of investors because you can, forecast the earnings 10 years into future, easily stating that, these companies will be around for the next 10 years and they can grow at 10%, 12% easily, and they keep on expanding their network and changing habits in terms of food, and rising spending, rising consumerism will drive their growth. Okay, so far so good. But then what's the reason why from time to time, every 2-3 years, they have these soft patches which last for 3-4 quarters or so? And this could be a soft patch which lasts for 3-4 quarters, but the valuation and the prices have not corrected. And that's the reason for my advice to stay away from the QSR space.
Well, what a year it's been. I mean, for Varun Beverages, frankly. It got listed, nobody noticed it. But now the fact that they are having into a serious relationship with Pepsi and they are moving out of borders, also it's quite interesting and quite encouraging. Dipan, are there any red flags in autos? I was looking at the month of Jan, and that's the only evidence which we have in terms of dispatch numbers. There seems to be a subtle slowdown which is now there in luxury cars. There seems to be a subtle slowdown, not a slowdown, but a visible slowdown in tractors. Now, autos have been in performing group. Is it time to take it easy now?
I would think so, because if you see auto numbers this time around, yes, I think volumes have stood up, have been steady, and which I think eventually once the base effect comes into play and once all the bookings start to get utilized, you may see a mild slowdown over there. Also, what I noticed is that the average selling price is also kind of stabilizing. Earlier, we were getting 14-15% type of increase in average selling price. Now that's more like 7 to 10% or so. And this quarter and last quarter, the earnings really did well because of lower raw material costs. But eventually, lower raw material costs will only do so much once you have the base effect coming into play. The profit margins cannot really move up much more from these levels. There was benefit of operating leverage as well, which will not be there going forward if the top line starts to slow down. And it's not that valuations are cheap. These companies also are trading anywhere from 25 to 35, 40 times their trading 12-month. So I would also be a bit cautious on auto, but not so much as compared to some of the high-profile consumer company like QSR, maybe to an extent, or some of the other fancied stocks per se. But yes, I think you can't expect the same kind of returns from auto companies what we have seen in the past 3 years into the next 1 or 2 years or so at least.
22249. What a number it's been. I mean, 22249. You just think about it, how things are. But there are two group of stocks which have fascinated me, really fascinated me. And my producer has guessed it because I talk about them every day. Trent and ABFRL. Go back to 2020. Stores were shut. Nobody was going to stores. Online retail did not pick up. So from 2020, if one looks at Trent, it has gone from 400 rupees. Hello. 400 rupees to 4,000 rupees. 400 has become 4,000. ABFRL, 3-year return. ये क्या है कुणाल?
100 to 250.
No, 3-year return is, if you look at this chart, it's actually giving you negative returns.
I think in 2020 it was
from the low.
from the lows.
So I'm saying you look almost like the
compared to
pre-COVID
Trent
high.
has, of course,
It has not
outclassed.
gone back to its pre-COVID highs also.
No, I think it had done it in 23.
Yeah, but right now it's not at the
now it's not
pre-COVID
there,
high.
correct.
Dipen Mehta, isn't this fascinating? One Tata Group company, other Birla Group company, both are in the same businesses, both are from pedigree groups, both are expanding. But in terms of return, one has been a multi-bagger and one has been a dodo performer.
Yeah, I think as a trend shareholder, only thing you can, ascribe this kind of a value is on account of the kind of focus that the trend company, the trend group has. They're very focused. Unlike other retail companies which have gone about acquiring new brands and getting into many things, including many products. But here we had Trend, and then they did Zudio, which is focused just on apparels. And a lot of it is their private label, which have got very high profit margins. And they've been extremely, I would say, sharp in terms of new store openings. And they've clearly leveraged the Tata brand, their supply chain advantages, and their overall, I think, merchandising has worked out really well for them. I think if you speak to people who shop at West Side, which my family does, and they kind of, there's a high degree of loyalty over there as well, and consistency of products. And I think that's been reflected in the stock price, which has done as well. In any case, a company like Trent has got a very, I would say, the shareholding pattern is very tight, and there's hardly any floating stock. And once you have money coming into your fund or your portfolio or a portfolio manager, and you have Trent in your portfolio, you have to buy more of it. That's what causes the stock price to move up even higher. But at these levels, I don't know whether you can buy at 4,000 rupees and expect to make a great deal of return. So you need to wait for a correction. In a market correction, you could get Trend 25-30% cheaper or so. And then if you have a horizon of 3 to 5 years, then this company can still make money for you.
See whether that correction happens or not, because for now that stock has been a massive wealth generator. But Dipan, before I let you go, last question, and this one in the capital goods space. ABB came out with its earnings. Not sure if you got a chance to look at it, but very strong order inflow.
Yeah, that's right. I think not surprised at all. I think across the board, capital goods companies have been getting very strong inflows. And ABB clearly, they've done a fantastic job when it comes to changing the profile of their products. They're now more and more into factory automation or smart city solutions, or for that matter, other high-tech products and service offerings, and not the typical, products which they were offering for electrical in the electrical space. And that clearly has worked out for them. But business still remains quite cyclical, and valuations still remain extremely high. So I would say that, at these levels, the risk return profile doesn't really favor you.
Appreciate your time. Thank you so very much for joining us, and I must apologize to you. I know we'd booked an appointment with you to shoot at Dalal Street, but trust me, something unprecedented came that day, so I had to stay back. But you still owe me a coffee, which you promised me.
Absolutely.
वो change नहीं होगी.
Anytime for you, Nikhil.
Look forward to it. Thank you, Dipin bhai. There's an interesting tweet from Nilesh Shah. We'll try and get it on the show. As to, 6 years ago, Nilesh Shah Kotak made a case that India actually is going to be seeing a huge resurgence in terms of the MSCI rating, weightage. And that actually has turned out to be true. We'll try and take tweet out of it. I mean, I'll wait for it to get, for us to make it, and then we'll really talk about it. And we'll try and see if Nilesh can also join us on the phone. It would be a good idea to congratulate him. 216 points higher for Sensex, 15 points lower for Nifty 50. We are in for a stable start. It may be a day of no trade. It may be a day of perhaps you just look at the market and perhaps don't get too many bargains. Nuresh, the global cues are following. They are weak, flows are positive, and FNO market is indicating that there is a bout of short covering. How would you construct the lay of the land for someone who's just joined in and wants to identify a trade for the day?
So the trade for the day going forward and for the next few weeks would be banking and financials. Because if you look at it, the Nifty has hit a new all-time high. Globally, markets have hit a new all-time high. Small caps have hit an all-time high. Before this move, they're yet to do so in the current move. But the only space which has not hit an all-time high and is struggling is the banking space. And in that space, we are seeing every day new leadership coming in. So we had SBI do well. So that was a 20% move. Then you had HDFC Bank, which was there, and now ICICI Banks looks interesting. Then you have Axis and IndusInd to look at. So the trade going forward should be to look at banks which are making a breakout move or seeing price action.
So that's a take coming in. But before I take the mid-cap ideas, let me quickly flag out some of the stocks which are expected to buzz around. At least in the pre-open, they are suggesting that Paytm is likely to open with another upper circuit of 5%. So that will be, I think, the third day on the trot, Friday, Monday, actually fourth day on the trot, that Paytm will be in upper circuit. You also have Campus, where there was a large deal that just happened. So that stock is likely to open with a gain of 4%. Hindalco is opening up in the green. Union Bank, that 3,000 crore coming in, that would spur the loan growth going forward. It's also likely to open higher, and ditto can be said for Devyani as well as ABB as well. On the losing side, Z Entertainment all the way, at least in pre-open, it's suggesting it's likely to start directly with a cut of around 10%. I think the stock is still in FNO band, so be a bit careful as far as positioning in that one is concerned. And TCS is the other one, which is expected to open with a bit of a red tick. But time now to take the mid-cap strategies with our technical experts. Kunal?
Well, that's one. Castrol, a stock which I recommended last week, looks very attractive in terms of the setup. The stock confirming a cup and handle kind of a breakout in the long-term charts, a swing breakout about 200 levels. So would suggest a buy with a target now at 222 and stop loss at 199.
What about you, Nuresh? What's the mid-cap strategy you have for our viewers?
So that would be a buy on Bajaj Consumer. The stock has consolidated well enough, went into a falling channel after that huge move from the lows of 160 to 260. Yesterday, the stock has given a breakout of the falling channel, a volume bump up as well. Expecting this to continue towards at least 255, 260 levels, stop loss at 217.
Okay, so that's the take coming in as far as the mid-cap strategies are concerned. But time now to run you through the top headlines at this point of time. Eminent constitutional jurist and veteran senior advocate of the Supreme Court, Fali S. Nariman, has passed away in New Delhi today. He was 95. He practiced law for more than 70 years, both in Bombay High Court as well as Supreme Court. He was appointed the Additional Solicitor General in May 1972. A fierce votary of civil liberties, Nariman was an important public voice whose critical opinions about judicial developments carried much weight in the judicial circle. So, starting today with a bit of a somber news as far as that is concerned. Shifting focus now to what's happening in Pakistan, because former Pakistan Foreign Minister Bilawal Bhutto Zardari and former Prime Minister Nawaz Sharif have struck an agreement to form a coalition government in Pakistan. The agreement ends days of uncertainty and negotiations after the February 8th elections resulted in a hung National Assembly in Pakistan. Agitating farmers are all set to resume their Delhi Chalo March today. The farmers are protesting over the demand of MSP support for all the 23 crops. Meanwhile, the centre has urged the Punjab government to take actions against some of these farmers. And Delhi police are on high alert, conducting drills to secure the entry points into the national capital region. Shah Rukh Khan, Nayanthara, as well as Nayanthara shine at the Dada Saheb Phalke International Film Festival Awards. The duo has took home the Best Actor Awards for Jawan, while Bobby Deol won the actor in the negative role for his performance that we all have seen and has been much talked about in Animal. Sandeep Reddy Vanga was given the Best Director Award for Animal, so clearly Jawan and Animal taking most of those awards at the Dada Saheb Phalke International Awards. But Virat Kohli and Anushka Sharma, they are also in the news flow because they announced the birth of their second child, a baby boy, on their Instagram account. They informed that he was born on the 15th and they named him Akay.
Alright, now what is the khabar? For that, let's go to Sharath. See?
In focus is Ipca Labs, and the khabar on the street is that company has started production for its US markets. Now the commercial launch is expected to come in by June 2024, which is the first quarter of FY25. Now it's expected that roughly 15 to 17 products are expected to be launched in the US markets over the next 2 years, and as per channel checks, 7 to 8 products are slated for that launch in FY25 itself. Apart from this also, the channel check suggests that the third-party API supplies ramp up that is expected to be delayed, and it's unlikely in the near term. And importantly, the company has almost 20 ANDAs awaiting approval, which shall be approved in the due course. So good development coming in for Ipca Labs. And do remember, we did check the Bloomberg analyst estimates, and out of 19 analysts tracking the stock, more than 60% analysts still have a buy or a hold rating. But the stock has been on a ripper, and it's given almost 51% returns to shareholders over the last 12 months.
Welcome back. Well, the big headline from the metal space, of course, is what's happening at Novelis and Hindalco, and those are the stocks which are reacting in pre-open as well. Let's listen in to the editor's take on that one.
Minus that tax, whatever money comes into a Hindalco, what would be the incremental benefit of this? So I think from my standpoint, I look at it this way, that if the cycle in the metal space turns, then suddenly on sum of part, when you look at Hindalco and when you look at Novelis, it could really look very, very differently. Historically, what we've seen is that every time when big companies, they tend to split the businesses, list different business separately, it tend to list very differently. The cash usage in this case, at least we are not aware as to what the final purpose of the cash usage is, because Hindalco is a pedigree company, they really don't have a debt problem. And the cycle in the last couple of years has been strong, but is it the capex requirement which they want to fund via the equity route? For Novelis per se, are they looking at unlocking the value of Novelis because it's a metal company, and when the cycle turns on the sum of part, which was always embedded in, now the real price discovery would happen? That I think could really be the option here. I think what they're trying to do, see from a group standpoint, they're trying to revalue Novelis rather than Hindalco divesting 25% stake in Novelis. I think that is the spirit here. So for Hindalco shareholders, it's not exciting. But for Novelis now, it really becomes part of an Indian company which is going global, and it is in the metal space, and then it's the first stop. So I think that is the spirit where ultimately the value of Novelis could be unlocked, because remember, Novelis is in US. US manufacturing is picking up. Given that now US election is around the corner, anything which has got to do with local US manufacturing, I think would really be the theme. And in that, I think Novelis is really going to score a lot.
Oh, well, yes, Novelis, that price discovery is something to watch out for, and the demand revival in the United States does augur well as well. Just tracking some of the volume buzzers, which are at least likely to see good volumes at start itself. Campus, of course, has seen that large trade which has happened. But Kunal, if I can come to you and ask you about your view on Hindalco, what would be your recommendation on the charts? And Hero MotoCorp, for second day on the chart, that stock is coming under pressure. Yesterday afternoon, of course, we got that Morgan Stanley note wherein they opened the negative catalyst watch and said that there's 70 to 80% probability that stock will fall relative to the index for the next 30 days. But at what level will you be a buyer at in Hero?
So for Hindalco, the view would be a bit negative to bearish, because the stock had shown a very sharp gap down few trading sessions back, and from there the impact which the stock has felt, it's not been able to recover from those sharp gap downs. So I believe that gap which has been created for the charts for Hindalco, which is closer to this 580-85 odd mark for the stock, I think that would remain as a major resistance. So there could be a phase where the stock may get into a minor rally like what we saw in the last couple of days, but those are not rallies to try and build long positions, at least from a trending perspective. Now for Hero MotoCorp, the stock was doing pretty okay over the last 2 to 3 months, but in the last 2 days, and as well as the pattern over the last 2 weeks, suggests the formation of a double top for Hero MotoCorp. So the pattern height on the upside is around 4,900, 950 as a resistance, 4,600, 4,650 as a support, which means closer to 350, 360 points could be a breakdown of this double top pattern. So I would probably expect that if the stock corrects, I think 4,300 could be the next trigger point for the stock. And in case if the pace of the correction subsides at those levels, that could be a point where one may look to initiate a fresh buy.
Okay. Markets open, 25 seconds to go. The thunder is missing in my books. I continue to maintain that. The thunder is back in Paytm. And will Novelis really create the thunder in Hindalco stock? Well, that's the way I'm looking at it. That's the screen for you guys. Global Qs weak. Net flows positive. F&O positioning, short covering. First rates, I'll let the screen do all the talking. First rate, it's not going to be a jumbo grand start, and it is not a jumbo grand start. A lot of red, but a little bit of green. The small and the mid cap indices are chugging along. Nifty is trading with a flat bias with a minor uptick of 10-11 points here. The breadth is looking charged up. It's not looking phenomenal, but it's looking charged up nevertheless. PDM, circuit up. Hindalco, 5% higher. Circuit up for PDM. Just moving from circuit to circuit. Hindalco, 3% higher. Let's look at some more stocks which are in Swan Energy, 4,000 crore QIP. And it's just sailed through. Just sailed through. 761 for Swan Energy. That's there on your screen. ET now broke the story yesterday of this large mega fundraise, and just big guys have participated in it in terms of pedigree. But the breadth is looking decent. The market tone is not looking bad at all. And Z is down 9%. Yesterday it was up 10%, down 9%. And I'm going to urge to our viewers that wait for clarity. Like they say in English, it's better to buy some, it's better to play seen rather than blind. In Z, I think, don't try to play the blind. If the news is true, you will get a lot of upside in terms of where the stock will go. And if the news is not true, then trust me, the stock will see a lot of downside. I don't know what's coming. At least we don't know at ET now. So I would say that in markets, it's better to play seen rather than blind. Don't preempt what is next. Wait for the turns and the news to emerge before you take a conclusive bet on the stock. Anisha?
Oh, well, yes, lots of volatility on Z Entertainment, but at least the markets at the Nifty level has opened at a fresh record high, so that's something to write home about. But watch out for Devyani International. The block deal happened on that one. Campus Activewear was the other one. There was a large deal that happened ahead of the market open. ABB India, it was a better than estimated performance on margins and order inflow. We are also watching out for Union Bank, that 3,000 crore QIP, which they have launched, will accelerate the loan growth going forward. There were a couple of acquisitions and tie-up that Wipro has done, as well as Tech Mahindra. Let's see if there is any amount of interest on some of those IT names or not. But what's really doing well today, starting on the front foot, is clearly metals, not just Hindalco, of course, on account of Novelis, but Jindal Steel, JSW Steel. These are the stocks which are also up in the trading session. From the two-wheeler basket as well, there is a decent amount of momentum, so not opening with a big red tick, but Hero MotoCorp is something that we should bring up on the radar and see what is that up to. The IT sector has started on the back foot and just tracking in terms of the other movers. You have K-Fintech as well, wherein there was a fresh brokerage note that came out from Jefferies. So that stock has opened with a gap up of around 4%. GR Infrastructure, where there was an order inflow, is also up 3%. On the losing side, it's all about All Cargo as well as Infosys, which are down in the trading session, and so is TCS. But time now to take the first trades with our chartist, Naresh. What has caught your attention?
So ICICI Bank, it would be on any intraday